So we have UK CPI coming out year over year. We have actually quite a few different numbers coming out. We have CPI, which stands for Consumer Price Index, months over months. We have CPI year over year. We have core CPI year over year. We have RPI, which is Retail Price Index, months over months. We have RPI year over year. And we have RPI ex-mortgage payments. Ex-mortgage interest payments, that is. Now, the most important number that everybody always talks about, at least in the UK, and it seems like the government seems to care the most, is the CPI year over year, regular CPI year over year, and that's what we're going to be focusing on. Well, first of all, let's talk about CPI and let's discuss what it means. CPI stands for Consumer Price Index, and what they do is they have a fixed baskets of goods and services that they measure prices of those things every month, and they basically monitor whether the prices have increased or decreased from the previous months. Obviously, an increase in prices signifies inflation, and a decrease in prices signifies deflation. Inflation is always expressed in a positive number in percentage, and deflation is expressed in a negative number in percentage. And as you can see in the trade plan right now, we have UK CPI year over year, and expectations are that it's going to come out at 2.8%. Oh, excuse me. Now, previous months it came out at 3.1%. However, today they're expecting that it will subside to 2.8%. Now, remember that previous months we saw a huge move in the GBP USD when the number came out at 3.1%. That's when the GBP USD actually broke the 2 level, the very important historical 2 level. And one of the reasons it happened is because inflation got out of control. As you may know, there, give me a moment here. As you may know, in the UK, they have a target rate of 2.2% even. So the UK government strives to have their most ideal inflation level is at 2%. Whenever the level goes above, if it goes above target by more than 1%, the Governor of Bank of England is supposed to write an explanatory note to the UK government, basically explaining why the inflation got out so much out of control and what they're going to do to help it. And basically, many times, what the countries, what they do to curb inflation is they raise interest rates. Supposedly, when they raise interest rates, what happens is borrowing becomes more expensive, and because of that, the business growth slows down, and inflation subsequently slows down. Now remember that the way the year-over-year inflation is calculated is like right now we have the months-over-months number coming out for the months of April. So basically the year-over-year number will be May of 2006 to April of 2007. So that way it's covering the full year, full previous year. And actually, obviously year-over-year number comprises of months-over-months numbers, but it's calculated. It's not like you just add the months-over-months number. know, it's calculated with kind of like a weighted average and stuff. And what actually happened is right now the April's number of 2007 is replacing April's number of 2006. And what actually happened in 2006, we had inflation for April at 0.6%, okay? And right now they are expecting month-over-month number to come out at 0.3%. So basically the previous April's number of 0.6% is being replaced with the current 0.3%, and because of that, obviously the year-over-year number is expected to drop to 2.8% from 3.1%. Now they are expecting month-over-month number at 0.3% versus previous number of 0.5%. One of the reasons is they are expecting that this April, whatever the households are paying for heating and electric is obviously slowing, simply because it's warmer and they have to use less heat and less gas and all that stuff. And obviously as demand for that stuff goes down, the prices for that stuff also goes down a little bit. And not only that, but less money is being spent on it. In addition to that, there was a big jump in furniture prices in March. There were actually, Dave Lee, you're telling me that there's no triggers. You're right. Give me a moment, let me upload the triggers in the secret news weapon thing. Give me a moment there, guys. For the weapon users, I didn't put the triggers. Okay, that's done now. Thank you there, Dave Lee, for giving me a heads up on that. Anyway, let's continue. Basically, they are expecting, there was a big jump in furniture prices in March, and in fact, Mervyn King, when he was writing that letter, even said that in his letter. He told the guy, listen, furniture prices went up crazily in March, and that was a one-time fluke, and that should not happen again. So in April the furniture prices should go down to normal prices, and because of that it'll affect inflation partially. In addition to that, obviously we'll need less heating, and heating should be cheaper, so that should also bring the inflation down. The only thing that's the biggest threat right now to inflation are actually food prices, and we'll just see what they do there. And interestingly enough, as you know, the United States government always looks at the core number, which excludes food and excludes energy, but the UK government actually looks at the whole picture, including energy prices and food prices. So everything is included in this 2.8%. So if you look at my triggers, I have triggers set at plus 0.2 or more for a possible buy on GBP USD. And as you can see, normally I have 10 pip limit triggers set there, but right now I actually have 20 pips limit triggers set there. And excuse me. And on the downside, it's simply because the reason I have 20 pips limit triggers set there is because I am willing to be filled in the first basically 20 pips of the price, because I'm expecting a very big move, bigger than normal reports if my triggers are hit, and therefore I am willing to take more risk and be filled at a worse fill, because I'm also not expecting a big retracement if my triggers are hit. So I want to be filled ASAP, even if I have to pay up to 20 pips higher prices than the current pre-release price. By the way, I will be using a bounds on the one here at 10 pips,